Palantir stock is down 20% after recording earnings this morning, and the stock year to date is down about 60%. Has anyone checked on Tom Nash and Cathie Wood this morning? I hope they're doing okay. What is going on, investors? Hopefully, guys are doing well out there. Time to talk about Palantir Technologies, ticker symbol PLTR, the company who just reported their Q1 numbers. We'll take a look at the revenues, the profits, the all-important Q2 outlook as well. I think that's what's having this stock go lower. We'll come over here and look at these numbers, the revenues, the way Palantir is controlling this cost, all-important stock-based compensation in the quarter as well. If you've been following our channel and our analysis on Palantir, we've long criticized them about the stock-based compensation expense. We'll see if that's gotten any better in the most recent quarter. And then we'll come over and look at this from a technical perspective. Obviously, when your stock is down 60% year to date and down another 20% today, well, the technical chart is going to look like an absolute complete disaster. And that is basically what we have over at Palantir. Now, right now, at the current time, I have the market cap over at Palantir south of about $15 billion. That includes today's drop as well. Obviously, those things get shaken out in the coming days and months ahead. We'll keep that in mind because when we've looked at this company in the past, it's been a $30 billion, $40, $50 billion company, and it made absolutely no sense. But now that we're at a $15 billion company with $446 million worth of revenue and a 30% growth rate in the quarter, have I turned from bearish to bullish? I think certainly your clue that Palantir might be a buy is when Tom Nash and Cathie Wood go bearish and I go bullish. That's probably a clear sign that this stock should be in your portfolio. We'll see if that day is today. Now, revenues came in, like I talked about, in the most recent quarter at $446 million. That was about 31% year-over-year growth. They did beat expectations on that revenue side by about $2.5 million. Now, I don't think that is what's sending this stock lower. What is sending this stock lower is exactly what sent Amazon and a lot of other stocks that we've looked at, certainly Netflix as well, Facebook. There's been a lot of stocks that just have been absolutely decimated, and it's the outlook. As we look into Q2, Q3, even maybe Q4 of this year, companies are just pulling back their revenue expectations, and Palantir is no different. They say that the Q2 is going to come in at $470 million versus consensus estimates at $483 million. Ooh, that's really bad. We come over here to the consensus revenue estimates over at Palantir. We see the most recent quarter. Analysts were expecting 443. The company came in about $3 million over that at 446. That was strong performance. I don't think that's what the stock is reacting on. It's this upcoming quarter where we're expecting 483 on the low end of analysts, and we've only got 4 to 6 analysts covering this company. It's not a lot. And on the low end, they were expecting $478 million worth of revenue. So the fact that Palantir is coming in even lower than that at $470 million, that is an incredibly bearish sign, not only for Palantir, but I think more importantly, the entire United States and maybe quite frankly, the global economy. As we head into Q2, Q3, we're starting to actually see the actual tangible evidence of inflation, of people tightening their belts. In the case of Palantir, certainly governments as well, with all the government contracts they have, we're seeing a tightening there. Now, if we look past that, because there are certainly going to be investors that say, hey, inflation will go away, the cycle will resume, and companies like Palantir will be back to normal. If we assume maybe 2023, maybe 2024, we're seeing revenue estimates kind of in that 7 to 800 million range. That would put this company kind of right in that like $3 billion mark in terms of sales. And I talked about how we've got a $15 billion market cap on Palantir at the current time. Well, you're still trading at about 5-time future sales on this one, okay? If everything goes right, if we grow kind of mid-20s, maybe even as high as 30% for the next 8 quarters, well, that would still put us at about 5 to 6 times sales on Palantir's market cap right now. Well, right now, Apple trades at about 6 times sales, and that's the trailing 12-month sales, not the future sales that are projected over at Apple. This company is still is still richly valued. That's another reason why you continue to see this stock slide. Now, some other reasons why investors are fleeing this stock is, yes, you have strong revenue growth at 446. Last year, you were at 340. That's really, really strong revenue growth. The number one reason why we continue to look at this company is they have these incredible gross margins, probably some of the best you'll see here on the channel and Wall Street for that matter. Just $94 million worth of cost on this $446 million worth of revenue. So you take 446, you minus off 94, you're left with about $352 million worth of gross profit. Last year, you were just at 267. So you grew that by about $90 million year over year. That's absolutely fantastic. A lot of this revenue growth flows all the way down to gross profit. That is the bull case argument for Palantir. Now, it kind of falls apart after that because they spent plenty on sales and marketing and went from 136 million up to 160. Research and development actually went down 98 to 88, and general administrative also went down. So I do like that they're controlling their cost a little bit. They had to drive up the sales and marketing to drive these sales, but they did a nice job. Research and development, I'm not too worried if that goes up or down because it's really investing in the future, but I like how general administrative basically went flat. It'll be interesting to see if that's what we can expect for upcoming quarters with Palantir, where this G&A cost line starts to flatten out. We've got total operating expenses went from 381 up to just 391. So it's really going to show an improvement on the operating side when your costs only go up by about 10 million and your gross profits went up by about 90, because you take this 351, we minus off 391, and we get to a loss from operations right at that $40 million range. Last year, we actually lost about 114 million. So it's improved considerably over the last year. I tell you what, these financials are starting to look a little bit better over at Palantir. It's not that I'm going to go and even take a flyer on this company, because when the broader markets are just selling off and pulling back, I mean, Palantir is not the only stock going down. There's a ton of names that I would like to buy. Palantir would not necessarily be at the top of that list, but these financials are starting to turn around. And I tell you what, the longer this stock stays beaten down, there are some things to like here. Now, finally, and I'm talking in the sense that we have a $15 billion valuation. If you bought this at a $30 billion valuation, a $40 or $50 or $60 billion valuation, you're never going to see that type of valuation on this company, maybe in your lifetime. So you grossly overpaid for the company, but in the context of a $15 billion company that's going to grow kind of in that mid-20s, maybe even as high as 30 heading into the upcoming quarters and years ahead, well, all of a sudden it makes a little more sense. Not as much sense as some of these mega caps that have dropped, but we'll get to that here more in a second. Now, in terms of our balance sheet over at Palantir, things look pretty good. Got about the same amount of cash, got about the same amount of liabilities. It's basically a sideways quarter from a balance sheet perspective over at Palantir. Nothing new there from that perspective. Now, from a cash flow perspective, we pull down a net loss of $101 million. This company must have recognized a ton of stuff after operations. So we have our income from operations. We talked about how that was $40 million. Last year, we lost $114 million. We have some other income or an expense. It looks like they lost a bunch of money on something, because they lost about $60 million in the most recent quarter on some other income, and they had to recognize that here. Last year was just $5 million, so that's going to balloon your net loss to $101 million. So despite the improvement on operations, there was kind of a one-time charge here, or an outside liar charge that will impact our net income. Chances are we get to add that back in on cash flows. I tell you what, though, with Palantir, I wouldn't say I would ignore this. This sucks, but the operating income is starting to trend in the right direction. If they put together 2 or 3 more quarters of that, that certainly will be encourageable to investors. Now, in terms of our cash flows, we had this 101. We do see this unrealized gain, or in this case, a loss from marketable securities. So they lost a ton of money there, $62 million. They get to add that back in. The all-important stock-based compensation came in at $149 million in the quarter. So the company lost $101 million on net income, while they rewarded executives with $149 million worth of stock-based compensation. I'll remind you, this company has $446 million worth of revenue, and in the quarter, they paid themselves $149 million worth of stock-based compensation. I know a lot of you guys are going to get into the comments, and maybe you've been trained by Cathie Wood or Tom Nash or any of these people that have been mega bullish this stock forever. When this thing was $30, $40, $50 per share, people were pumping this down your throat saying this was the next Amazon and Tesla combined. They simply and conveniently ignored the fact that a lot of these expenses are going to stock-based compensation. And some of you saying, and accurately saying, well, that's not cash. Well, guys, if I didn't eat the last 3 pizzas and a pint of ice cream over the last week, I'd probably be 10 pounds lighter. But unfortunately, I can't take that stuff out of my stomach, and we have to compensate these employees. And I tell you what, when your stock is down 60%, guess what Palantir is going to have to compensate employees with? Cold, hard cash, because these shares are absolutely worthless, and they're heading that way. We get to add back things like the stock-based compensation, a complete whiff on these marketable securities at the tune of $63 million. But we see that our net cash provided by operating activities, it still wasn't enough to give us an improvement year over year. So I think the guidance, the Q2 guidance coming in a little light over at Palantir, that is scaring investors away. The other thing is this cash flow. It went from 116 down to 35. So despite our operating income gains, our cash flows is actually painting a worse story. That is not good. It's also a sign, the fact that this stock-based compensation, yes, it's going to start to normalize a little bit. It starts to go down, but you can't retain your best employees if your stock continues to go down like Palantir stock. They're simply not going to want it. They're going to want cash compensation, or they're going to go work somewhere else where the stock chart doesn't look like that. Now, everything else from the cash flow perspective looks about what you'd expect. Cash has left this company to the tune of about $34 million in the most recent quarter. They still have plenty of cash sitting here on the balance sheet. They can survive these types of losses, but investors are clearly getting impatient with the stock. When you come over here and look at this stock chart, it is in just a downward channel, and more specifically, I'll zoom into the price action just over the last couple of weeks or so, and we see we had some areas of support down here at, believe it or not, about $9 per share. Even more specifically, there was probably a range. The stock was trying to hold kind of that $9 to $10 range. There's probably some ETFs and some other investment funds out there that have a rule that, look, they can't even invest in stocks that go below 10. Me personally, I have a rule there as well. It used to be $5, but now with inflation and time passing, I really don't even look at stocks less than, I would say, even $20, $25 per share. It's clearly a sign something is wrong, and certainly with Palantir's case, gapping down below that $8 to $9 range down here at $7. There's really not a lot to talk about here from a technical perspective. You've broken through kind of the key IPO price. You're in no man's land territory on the way up. Some of you will say, well, oh man, this is a great opportunity. Well, okay, on the way up, you're going to have resistance kind of in that $8 to $9 to $10 range on a really, really bull run. I mean, this would be fantastic, but then all the way back up through kind of the $10 to $12 to $15 range, you should have sellers step in. A lot of these is retail buyers that stepped in and bought with Cathie Wood, bought on the influencer hype of this stock, and will look to cash out if and when they can break even on their shares. Right now, I would not buy this company. Let it keep falling like a Japanese steak knife. At some point, the valuation starts to make a little bit more sense. I think if you want to look at future earnings, and look, because they brought in their guidance in the most recent quarter, we probably have to bring in a lot of these numbers heading into 2023 and 2024. A lot of uncertainty looking forward. But if we assume that maybe in 2 or 3 years, this company will be doing about $3 billion worth of revenue, I wouldn't want to pay more than maybe 2 or 3 times future earnings on this one. That means this would have to fall south of about a $10 to $9 billion valuation before I even considered it. And I think if Palantir falls to like an $8 or $9 billion valuation, there's going to be a ton of other stocks that have far more cash flows, maybe doing buybacks and paying a dividend, that I'd rather invest in than a loser like Palantir. Will Cathie Wood and Tom Nash finally admit that this is one of the biggest turds in the stock market in the coming days ahead, or will they double down? That'll be interesting to see. Hopefully you guys enjoyed today's video. Good luck with your investments.